Hello dear students. Now let us start with 11th chapter, set off carry forward. See, first of all, it may be possible that there are some losses in one particular head and there is an income in other head. Always try to set off the same internally. First you will set off against the income of the same head. Then you will try to set off against the income of the other head. If still that loss is there with you, you will carry forward it to the upcoming years. And after that upcoming years, against which income you can set off, that also we'll see. See, remember, generally if during the year the loss is incurred, then you can set off against any head, subject to some limitations. But if in the next year you want to set off that loss, then it will be set off against the same head only, not against other head. So here we are going to see that against which head first of all you will be setting off the loss, intra-head adjustment. Then against which other head you can set off the loss, inter-head adjustment. For how many years you can carry forward the loss, and after carry forwarding the loss, against which head you will set off the loss. Now head wise will go. First of all, loss from salary. It can never be possible. It can never be the case that you are going to work in an organization and you are paying the amount to them. So it is never possible. Second, loss from house property. Remember, first it can be set off against other income from house property up to any amount. If still the balance is there, you can set off against other head including salary. But this you can set off maximum up to 2 lakh. You cannot set off more than that 2 lakh. Combinedly of any other head together. Then whatever is the balance head, up to 8 years you can carry forward. 8 years start after this year. And once it is carry forwarded, then you can set off only against the head house property. But then once it is carry forwarded, then there will be no limit. So first you can set off against income from house property, like there is a SOP, there is a LOP. Then the loss from self-occupied property you can set off against the income of let out property. Still, if the loss is pending, you can set off against any other head, but maximum up to rupees 2 lakh. Balance will be carry forwarded for 8 years, but then only against income from house property. Now comes to PGBP. They have divided PGBP into some 5 parts. Let us understand one by one each and everything. Number 1. Any kind of loss from a business, and that business is non-speculative. It is not a speculative business, it is non-speculative business. This kind of loss, first you can set off against income from PGBP. Now it can be speculative, it can be non-speculative, it can be the business of section 35 AD, specified business also. You can set off it. Means internally in PGBP you can set off. Balance, if any, you can set off against any other head except salary. Means PGBP loss you cannot set off against salary income. But here there is no limit of rupees 2 lakh. It was only there in house property. If still the loss is pending with you, you can carry forward for 8 years, and after carry forward, you can only set off against the head income from PGBP. It can be non-speculative, it can be speculative, it can be 35 AD. Now let's say you have unabsorbed depreciation, unabsorbed scientific research, unabsorbed family planning expenditure. First you can set off against income from PGBP, non-speculative, speculative, 35 AD. Balance, if any, you can set off against any other head except salary. But this is a special expenditure which has no life, infinite period. And after carry forward also, you can set off against any other head except salary. That is a special expense which even after being carry forwarded can be set off against any other head also. Then loss from PGBP, which is a speculative loss, not that good loss. It can be set off only against speculative income. Balance, if any, can be carry forwarded only for 4 years. And after that 4 years, means in between that 4 years, it can be just set off against other speculative income. So remember, non-speculative loss can be adjusted against speculative profit. But a speculative loss cannot be set off against non-speculative profit. Then, loss from owning and maintaining horse races, that is race horses. It can be set off only against the income of owning and maintaining race horses. Balance, if any, you cannot adjust against any other head. You have to directly carry forward the same, and that is also maximum up to 4 years. And after that 4 years, means within that 4 years, you can only set off against the income from owning and maintaining resources, not other than that. Then loss of 35AD, specified business loss, we have seen in PGBP. This loss can also be set off only against the income of a specified business of 35AD. You cannot set off this loss against any other head. Now, once you set off this, if still the loss is there, it can be carry forwarded for again infinite life. There is no limit for that. And after carry forwarding the same, you can set off only against income of 35AD. So what I can conclude, loss from non-speculative business can be set off against specified business, but loss from specified business cannot be set off against non-speculative income. Then it comes to short-term capital loss. First, it can be set off against short-term capital gain. Then it can be set off against long-term capital gain. But then it cannot be set off against any other head. You have to directly carry forward the same for 8 years. And after carry forward, it can be set off against STCG or LTCG. If we are talking about long-term capital loss, it can be just set off against long-term capital gain. It cannot be set off against short-term capital gain. It cannot be set off against any other head of income. Then directly carry forward for 8 years and then only against LTCG. So I can say two things from this. Short-term capital loss can be set off against long-term capital gain. But long-term capital loss cannot be set off against short-term capital gain. Business loss can be set off against capital gain income, but a capital loss cannot be set off against PGBP income. Are you understanding my point? Then, loss from IFOS. If there is a loss in income from other sources, you can set off against any head. First, obviously against income from other sources. Balance, if any, against any head including salary without any limit. But then you cannot carry forward this loss. It will end over there. You cannot carry forward it. Last, any loss from casual income, that is card game, other game, lottery, gambling, betting, very bad loss. Even you cannot set off internally, you cannot carry forward it also. You have to totally ignore that loss. Even loss from gambling cannot be set off against income from betting also. So no set off possible. And even you cannot set off other losses against casual income. So loss of casual income you cannot set off, and other losses you cannot set off against casual income. So in short, I have just done the conclusion of 4 things from this. Number 1, there are only house property loss which has the limit to be set off against other head, that is 2 lakh rupees. There are 2 kind of losses which has no life. Number 1, unabsorbed depreciation wala, and number 2, 35AD loss. There are 1 loss which cannot be carry forwarded, and that is IFOS loss. There is 1 loss which you cannot set off only, and that is what? Casual income ka loss. Non-speculative loss can be set off against speculative income, but speculative loss cannot be set off against non-speculative income. Specified loss cannot be set off against normal business income, but business loss can definitely be set off against specified business income. Business loss can be set off against capital gain income, but capital loss cannot be set off against business income. Then last, short-term capital loss can be set off against long-term capital gain. Long-term capital loss can never be set off against short-term capital gain. Now, in any year, if you have a business income, always first you will deduct current year depreciation. If balance profit is there, then you will deduct brought forward business loss. If still balance profit is there, then you will deduct unabsorbed depre, then unabsorbed scientific research, then unabsorbed family planning. This will be the hierarchy for set off. Remember section 80. This was asked in this July 21 exam. 4-mark theory question was there. If you have any loss and if you want to carry forward, compulsory you have to file your return of income before the due date of 139 subsection 1. If you file your return of income after the due date of 139 subsection 1, remember, you cannot carry forward that loss. You have to forget that. But 2 kind of losses are there which you still can carry forward. Even though return is filed after the due date. Which 2 losses are there which you can carry forward? House property loss and unabsorbed depreciation. These 2 you can carry forward. One more point which you have to remember. if you have any exempt source, income from that source will be exempt, that is true. Even losses from that source is also exempt, and that loss you cannot set off against any taxable income. For example, I have a loss from agricultural activity. That loss I cannot set off against my taxable income. I have to totally ignore it. Then you can set off house property loss against any other head, even including salary. But if you are following section 115 BAC, you cannot set off the house property loss against any other head. So if you are following 115 BAC, house property loss can be set off against house property income, but then directly it will be carry forwarded. One last point. From the students review, I came to know that this MCQ was there in July 21 exam, and even it was asked in one earlier exam also. Book profit. In your PGBP chapter, I have covered this concept of book profit. If you are a partnership firm, you want to pay remuneration to your partner, then there is a certain limit which is mentioned under section 40 clause B. Up to the amount of 3 lakh rupees of book profit, or there is a loss, 90% of the book profit or 1,50,000, whichever is lower. Sorry, 90% of the book profit or 1,50,000, whichever is higher. That can be the maximum amount. And whatever is the book profit over and above 3 lakh, on that 60%. Now what is book profit? It is basically your PGBP income before deduction of remuneration. So I have made you write a formula over there, net profit as per P&L, plus or minus each and every adjustment of PGBP chapter, plus remuneration if it is debited to P&L. Now in that, below that, I have made you write a note also, if you see, that you cannot deduct brought forward business loss because it is covered under section 72-73. But you can definitely deduct unabsorbed depreciation because it is covered under section 32. But now what is the problem? That while calculating the income, we always first deduct brought forward business loss and then unabsorbed depreciation. Let's say there is a question in which net profit before loss and unabsorbed depreciation 2,70,000. Brought forward business loss is rupees 2 lakh and unabsorbed depreciation is 1,20,000. And if I want to calculate my book profit, I can only deduct unabsorbed depreciation but not brought forward business loss. But think that in this year, how much profit will be available against which I can deduct unabsorbed depre. And if I am thinking that, first I will deduct brought forward business loss, then there will be the turn of unabsorbed depre. Means from 2,70,000, first I will deduct business loss of rupees 2 lakh. Balance 70,000 will be available with me. Means from 1,20,000 of unabsorbed depreciation, how much I will be able to absorb this year? Only 70,000. Then while calculating the book profit, I can deduct only 70,000 and not 1,20,000. So what will be my book profit over here? 2,70,000 minus 70,000, that will be rupees 2 lakh. Of that, 90% I can give as a maximum remuneration, that is 1,80,000. Are you understanding this point, people? Yes or no? So that was almost entire provision of set of carry forward chapter. Thank you so much.